I'm back with another peek at our 30-day business transformation program. If you missed the last two videos, go check those out because I am sharing sneak peeks into the classes in this program each week for 7 weeks. Today, we're taking a look at a segment from module number 3, Develop Your Brand. So grab your free worksheet download in the description and take a peek. All right, let's jump in here with the structure of your business. Legally speaking, there are a few different ways you can structure your business, and I want to make sure you understand the differences because there's a lot of nuance to each, and this affects how you operate your business as well as how you'll be taxed, liability, all that stuff. Keep in mind that just because you've chosen one structure doesn't mean you may not want or need to change to a different one now or down the road. This is something that often changes over time, so keep that in mind. Now let me be clear with a reminder, while a lot about these structures may apply internationally, every country is different and has their own rules. Everything I'm referencing in this section is in regard to how things are structured in the US. If you are outside of the United States, consult with your local government on the matter of legal structures for your business. All right, the 4 basic structures or entities we're going to go over are sole proprietorship, general partnership, limited liability companies or LLCs, and corporations. That includes S Corp and C Corp. For each of these, we're going to look at the basics of 4 things: ownership, liability, taxation, and how you register that structure. So let's look at what each one of these entails and what that means for you as a business owner. First, a sole proprietorship. This basically means you're in business for yourself and by yourself. There isn't any need for more formal business structures and titles and such, nor is there very much in the way of legal documentation. You can practice under your own name or declare a DBA, which is a doing business as name. So it could be Jane Smith, doing business as Oasis Spa, or whatever name you choose. If you want to go this route, you can file for that DBA with your state. You're just essentially saying, I want to open this business under this particular business name. And as a sole proprietor, you get what's called pass-through taxation. What this means is that all of the business income is treated as your individual income and taxed accordingly. So it's not that the business has an income that's taxed and then you draw a salary that's then taxed as well. Instead, every cent the business makes is considered your income and you're taxed on that. Now, obviously, you have expenses and write-offs and such, but the net income, what the business makes as profit and what you take home, is taxed as it's all your income. So to recap, sole proprietorship means you and you alone own the company. You and you alone are personally fully liable for the company. Business income is taxed as your personal income. So there's self-employment tax and personal income tax, Medicare, Social Security contributions, all of that. And you can register for a sole proprietorship using a DBA name with your Secretary of State's office. Use the links in your workbook to go to your state's SOS website, and it should have everything you need to register your business right there. Now, there are some pros and cons to having a sole proprietorship. Some pros: it's quick and easy and there's very little paperwork to fill out. There's not much paperwork involved as for the structure of your business. Also, again, there's no separate tax return because all the business income is declared as your income. Plus, you have complete control over your business as there's much less government control, taxation, and fees associated with a sole proprietorship compared to some other legal structures. However, there are some cons, like you are personally liable for all debts and obligations, meaning banks and the government can come after your personal assets as well as your business assets. For example, let's say you default on a business loan. The bank can come after all of your business assets, and if that isn't enough to cover it, they can then come after your personal assets, like your home and your car. And vice versa. Let's say you are sued personally. If they win a settlement and your personal assets aren't enough to cover it, they can come after your business assets. So because you and your business are considered one and the same, there is no separation financially, legally, or otherwise to cast a net of protection around either one. Also, if you're looking for a loan or investors, it is far more difficult to get those as a sole proprietor because you don't have the officially structured business that, again, separates you personally from the business. Next, a general partnership. This is when 2 or more people start a business together. Technically, you can have a partnership with an LLC and a corporation, like we'll talk about in a bit, but a general partnership is like the duo version of a sole proprietor. It's a lot less legal red tape and the simplest form of a partnership. So that's what we're talking about here. Now, there are some benefits to having a business partner. You have someone to share the risks, expenses, and responsibilities with. You can have complementary skills and contacts to make the most out of the partnership. And you have a sense of support because, let's face it, solo business ownership is hard and lonely sometimes. But let me be completely honest here. I never recommend partnerships. Now, I know there's a lot of business partnerships that work, But in all honesty, I've seen far more fail than have ever succeeded. If you're dead set on going this route, know, and I mean really know, who you're signing up with. Personality traits, work ethic, temperament, stress tolerance, who's the number one and who's the number two in the relationship, because you will need to have an alpha and a beta deal going in the situation concerning certain topics. How do you deal with grievances? How good are they with finances? What is their customer service like? Things like that. And all the responsibilities and expectations need to be spelled out in a contract. If you're not 100% on the same page, a disaster will happen. My rule of thumb is if you wouldn't marry them, don't go into business with them. And even going into business with a spouse is risky, as it is a whole new level of strain on a relationship, because actually the divorce rate among business partnerships is much higher than the actual divorce rate. Some studies suggesting that up to 80% of business partnerships fail. So just understand what you're getting into here. I don't say this to be a downer. It is just honestly not something I recommend based on experience and data. And if you still want to do it, okay, but you need to seriously consider all aspects. Don't just think because you get along well that a business partnership will work. Be realistic about the possibilities. So to recap, a general partnership means you and that other person own the company together. You and that other person are personally fully liable for the company. Business income is taxed as your personal income, so there's self-employment tax, Medicare, Social Security contributions that you're each responsible for. And again, you can register for a general partnership with your Secretary of State's office. Go to your state's SOS website using the link there in your workbook, and it should have everything you need to register your business right there. Now, depending on your area, they may require a certificate of partnership, which is just a filing of your business and notification of the partnership, along with the basics of the business info. And you may also need to file what's called a partnership agreement, which is actually your internal contract between both parties that outlines each person's duties, powers, and responsibilities. Next, let's look at an LLC. This is a limited liability company. This is the basic structure if you want a clear separation of you and the company when it comes to liability, because it does just that. It limits the liability of the owner of the company. So if you want to step up from a sole proprietorship but not go full corporate, this is a great middle ground because it combines the characteristics of both. Keep in mind that this is limited but not complete. So typically speaking, your personal assets like your house, car, and savings accounts are generally considered safe if something happens business-wise, like the LLC gets sued, defaults on a loan, tax debt, stuff like that. However, there are exceptions, and you'll need to be very careful not to personally commit to any debt or tax obligation as a secondary to the LLC. So for example, if you go to take out a business loan as the LLC, sometimes the bank doesn't want to get left holding the bag if your LLC defaults and your business doesn't have the assets to back it up, so they may require you to personally co-sign or otherwise commit to the loan. That negates any LLC protection because technically you just signed on personally for that debt as well. Also note that as an LLC, your taxes are configured the same way as a sole proprietor with that pass-through taxation. So all business income is treated as your income and taxed as such, which means you're responsible for self-employment tax, Medicare, Social Security contributions, and all of that stuff again. So an LLC is basically like the combination of a corporation and a sole proprietorship. You get the liability protection of a corporation and taxation of a sole proprietorship. Now, in some states, there's also what's called a PLLC, which is a professional limited liability company. And sometimes that's required for licensed professionals like massage therapists. That's not very common, but it does happen in a few states. So that's something to look into as well on your Secretary of State's website. So to recap, LLC means the business is a separate entity from you. The business has its own liability and you are not personally responsible for such. Business income is taxed as your personal income though. So there's self-employment tax, Medicare, Social Security contributions, all that stuff you're going to be responsible for. And again, like the others, you can register for an LLC with your Secretary of State's office. Go to the website, should have everything you need there to register your business there as an LLC. You're likely going to need two primary documents: articles of organization, which describes the basics of your LLC and includes the general business information, and you'll need an operating agreement, which describes the structures of the company's financial and functional decisions. This one is especially important if you're creating an LLC with a partner or there's otherwise more than one person involved. There may be more or less depending on your state, but that's the basics that are most common. And lastly, moving on to corporations. There are two main types: a C Corp, which is just a plain corporation, and an S Corp. There's a big taxation and a few structural differences between these two, so let's look. A C Corp is a separate legal entity from the owner and offers the strongest protection to the owner from personal liability. However, the cost is much more significant and the paperwork is a lot more, and they require much more extensive record keeping and reporting as well as operational processes. Now, when it comes to the tax issue, C Corp owners are kind of double taxed. So since the business is its own entity, all the income of the company is taxed, and then the owner's income that they take from the company is taxed as a W-2, personal income type. So there's kind of a double taxation thing going on there. An S Corp is taxed differently in order to avoid this double taxation. It's called pass-through taxation again, and is similar to how an LLC is taxed. So the profits and some losses can be passed through to the owner's personal income without being subject to that corporate tax first. Most massage business owners that want to go the corporate route as their business grows will choose an S Corp for those tax benefits. So to recap those, both a C Corp and an S Corp separate the business from you as the owner. The business has its own liability with both C Corp and an S Corp. With a C Corp, the business income is taxed first, and then the owner's income is taxed individually on top of that. And with an S Corp, you get that pass-through taxation, so the business's income is recognized as your income, more or less. To file for a C Corp or S Corp, you'll need to not only do this on the Secretary of State's website of your particular state, but also with the IRS as well. You'll need an Articles of Incorporation document that is comprehensive layout of the business, and you'll also need what's called a Bylaws and Resolutions document, which is an internal governance document for the corporation, defining how decisions are made, duties, all that stuff. Again, this varies a bit by area, so there may be more or less around that. So which structure is right for you? I can't tell you that here because it's too individual of a thing to decide. This will greatly depend on the goals you have for your business. However, I will say the kind of normal route I suggest is that you start as either a sole proprietor or LLC. Sole proprietor is the easiest and quickest to get started and is a first step for many, and then you can bump up to an LLC as soon as you're financially stable and have your feet in the business world a bit more. The more financial stability you have, the more personal assets you want to protect, and the more likely I'll suggest an LLC sooner. Now, a lot of you will likely stay with an LLC for the long term, but many of you might bump up to an S Corp, especially if you start bringing in employees, expanding your business more, and generally make the business a little bit more complex. No matter what legal structure you use, there are some variances between states, so it's important that you figure out what your specific area requires. Again, you can get all the documentation filled out and done all by yourself through your Secretary of State's website and the IRS website, or you can get a private attorney to take care of this for you and walk you through any specifics. It really is up to you how much of the process you want to take care of yourself and how much money you want to spend. Either way, get help through this process with a legal pro or your state's office so that you can be certain that you're dotting all your I's and crossing all your T's. Along with whatever structure you choose, you'll likely need an EIN, or an employer identification number. Don't let the name fool you. This isn't only if you are going to be an employer. This is your federal tax ID. So if you want to open a business bank account, which is kind of important, they're likely going to require an EIN. If you need a business loan, you need that EIN to identify your business as the responsible entity on the documents. Just get an EIN. It's free and only takes a few minutes. You may also need a state tax ID, and that varies greatly by state. So again, take a look through the SOS website for your state that's linked there in your workbook and see what your area requires. Decide which business structure is right for you, and then use those links to see what your next steps are in registering your business. Remember, even if you've got one established, that may need to change now or just down the road if you look back at those goals you've made and realize things are going to be shifting and you need more security on some things. So take a little bit to think on what's right for you in your situation and then get to it. And also note that when you register your business with your state, whichever structure you use, that's where you're registering that business name that you came up with in the last module. So even if you're not changing your business structure here, if you've decided on a different business name through the branding process, you'll need to change that with your state. Thank you so much for watching today. If you want to sign up for the program and see more of what's included, I will link that below. Be sure to follow us on all your favorite social media platforms, sign up for our emails, join our Facebook group, and keep an eye out for business tips, free content, updates, and all kinds of other goodies to help you grow your massage practice. See you next time.